really love to bring in Natalie just to, I guess, you can see from the poll question that we asked, there is some misunderstanding around, affordable credit. So really coming to you, what's your experience with it?
So, hello everybody. As Naz said, I'm Natalie Jutla. I'm the benefits lead for DEFRA Group. But what none of you will know is I'm also a single parent for the last 20 years. And more importantly, I left a domestic violent relationship with £6.50 and my 13-year-old son. So that all happened in 2014 at a time when nobody was talking about finances or financial education or capability or affordable borrowing or any of that. So for me, this is really about what it means to you personally. So this benefit is really close to my heart because when I left that domestic violent relationship, I had nothing. I had no teaspoons, no tea towels, no bedding, no beds, nothing. So having a way of being able to get affordable credit that I could get through my employer, that I didn't need to have any credit rating for, I didn't need to explain to anyone, because the minute you have to start explaining where you are, no matter what your situation is, so even if you haven't left a domestic violent relationship, if you're in a place where you are really down on your luck or you don't have a lot of money, the last thing you want to do is take it to work. Because all the irrational thoughts of, well, if I tell them that I don't have any money or that I'm ashamed because I don't have any money, so I don't want to tell them, then they might judge me. That then makes you feel really like you have to justify your existence, and then will they judge you about how you do your job? Will it have an impact on that? And the thing is, we talk about mental health all the time, but financial well-being and capability is such an important part of your well-being. I'm sitting here today now. I've got a beautiful home now. I've got beds, I've got tea towels, and I've got way too many teaspoons. But I think what's really, really important is during that journey, my life would have been so much easier if I'd have known where everything was. So as a civil servant, I have access to the charity for civil servants who give out grants. Didn't know that. So for me, it's all about helping people understand that it doesn't matter where you are, whether you're at a point where you need to start saving or you're at a point where you think, oh my God, where am I going to get the money to buy my next loaf of bread? It's knowing what's available and how to get it. And it can have a massive impact on you as a person, but it can also have a massive impact on those around you as well. So they watch you go through that and struggle, knowing that they can help you, but you might be too scared to talk to them. So for me, it's about, I know they talk about it a lot in salary finance, about breaking the taboo, about talking about the stuff and it becoming as normal to say to somebody, oh, I'm really struggling with my money this month, as it is to say I've got a cold. Because actually it doesn't make you any less a human being. It doesn't make you any less who you are. It just means that at a particular time in your life, you didn't have what you needed, and I think that's the important thing as well. This isn't about saying to your employees, go and borrow some money, go and get a pair of Christian Louboutins. This is about saying we're here to help you from a situation you're in where you may have a lot of borrowing to help you get it to an affordable limit. I can remember a story that a friend of mine, Monica, told me about how a young lady took affordable borrowing and she was paying out like £180 a month in payday loans. She took out this affordable borrowing. It made such an impact on her life that she was able to pay off all her debts, have one payment a month, budget, and at the end of that, she started saving. And 5 years later, she had a deposit to buy a house with. So, I think, the more we can talk about it, the more we can say to our employees, talk about it, tell me about it, what can I do to help you? Or even if you don't want to talk to me about it, here's something that will show you what you need to help you make more capable decisions. That's kind of my story. I think we spoke, didn't we, when we were talking last week before we came onto this about how, it's the world we live in now. But financial well-being should have been around years ago. We've always lived in a world, where there were, power cuts in the 70s. I remember queuing for bread when I was 8 because there was no bread. There was nothing on the supermarket shelves. We've always been in a situation, but back then nobody talks about it. But more importantly, back then nobody spoke about. Sorry about that. Nobody spoke about anything. They didn't speak about mental health. My dad had a mental health breakdown back in when I was about 7 or 8. I knew he was ill and I knew he took these tablets called Valium, but it wasn't mentioned outside the house. And I feel that that's where money is right now, And we need to get people talking about it so it becomes the norm, so that we can all help each other. I think that's how I feel about it anyway.
Yeah. I think an important thing there, Natalie, to draw out of everything you said is first of all, thank you for the bravery to actually share the lived experience, because I think it's really vital to see that even when you are in control of your, somewhat, you think you're in control of your finances and everything, a situation can come along and really change the situation. So, it's to reserve judgment. But I think one thing that resonated me, and I think it was Jason that made this point, is we need to be thinking about helping our people where they are now, not where we want them to be, where they are right now, and then support that journey as, where they, taking them along that journey, which is a really good, segue to go to you, Jason, perhaps, is what is affordable credit and why is it so vital for employers to understand how it can benefit their employees?
Well, yeah, I'm very happy to describe what that is, but let's just make it very clear that no one else has this figured out either. Right. So everyone thinks that everyone else has got this figured, that somehow everyone else is more capable. And that by definition, if you're not where you want to be financially, and money's up there with eating, breathing and sleeping, right? That if you haven't got it figured out, that somehow you're a lesser person. And so the issue with money, because it's so intrinsic to everything we do, it is so intrinsically linked to people's sense of self-identity. And that self-identity is requiring two things: the sense of control. That's the ability to control what you're doing in life, sense of freedom and choice, but also the sense of the need for connection, so that you are feeling like you're safe and that you're with people and you feel part of something. So affordable credit, really what it does is it, for the situations of either where people have got a historic situation where they've got themselves into a scenario where they have got borrowing, right? So this is reality, whatever the reason, whether it's their own fault or whether it's because of circumstances like an abusive relationship or an illness or something that caused them to accumulate that thing, whatever the reason, that it enables them to take that historic situation, clean it up, lower the cost of it, and either enable them to get out of debt quicker by obviously less interest means you've got more monthly payments going to pay the capital off, or as in many of the circumstances of the customers that I speak to, and I interview customers every week for salary finance, is that it actually just gives them a little bit more breathing space to lower the immense drain on their monthly income while they deal with that historic situation. Then the other type of person is someone where they don't have much, if any, savings, and that's about 1 in 3 people in the country. And something comes along, the car breaks down, okay, and they need that to get to work, or they need to get school uniform because, I don't know, there's been an accident or something, at school or whatever, and they just don't have that money, and they need money now to meet an essential unexpected expense that they weren't expecting. So it's either historic or it's dealing with something where they just don't have the savings for it. So we know it's very easy to borrow money, okay? That's the easiest thing in the world. What it's not easy to do is to borrow money on fair terms, on a structured repayment basis, and that gives you a pathway into becoming a saver. So what salary finance does is it tries to make everyone as equal as possible by having the ability to deduct the loan repayments from someone's salary before they receive it. It pretty much removes the risk almost entirely that they're going to default on the payments. So therefore, salary finance can offer a lot lower interest than would otherwise be the case with overdrafts, bank loans, credit cards. And what that does is it makes people whose credit score might be, for whatever reason, they may have missed payments or whatever, or they're perhaps they've moved around a bit. It means that those people can be on a slightly better, they can almost be like someone with a perfect credit rating because of that lowering of a reduction of risk. And the second thing is, because it's structured repayment, it has to be repaid. It's repaid over a term, and that's all based on affordability. It's impossible for people to build up revolving credit. That's why banks like overdrafts and credit cards, because they don't really want anyone to pay it off. I'm sorry, I'm not saying people in banks are bad. They're all very nice people, I'm sure, but their business model requires them for people not to pay off the money. And that's why if you give people who are in a difficult situation or finding it difficult to make ends meet, have got historic debt, or they need to borrow, having revolving credit, which doesn't have a structured repayment, okay, and is not going to have a time when it's gone, it means it just hangs around like a bad smell. So think of it this way. And then the third thing, of course, is that we wrap all of our loan product with proper financial education. As Natalie can tell you, we do live webinars. When we could do them, we did live events in person. We provide podcasts. We provide loads of material. And Natalie can tell you, no one was more of a debt disaster than me in my early 20s, and I know everything what it is to be feeling shame, guilt, and also frustration about your financial situation. So what the affordable credit, our definition is, this is borrowing which is affordable because it is deducted from your salary before you receive it. It is a lower interest rate than virtually any other form of borrowing, other than borrowing for free from family and friends. Obviously, that's always your first port of call if you can do that. It's going to be repaid as a plan to get rid of it because it's being repaid over a period of time. And what we do is now we're starting to get success stories of people who have been paying off a loan, say for £100 a month. They get to near the end of the journey. They attend one of my wellbeing sessions, and now they're starting to think, oh, I haven't missed that £100 a month. I'll divert that into the savings product. And we have a savings product, which you can deduct from salary. And it's not about the interest rate. It's about that principle, that habit. And so what we're trying to teach people is, first of all, we don't judge you where you are. Okay, we meet you where you are now. We're not here to tell you what to do. We're here to show you how to help yourself. And one of the simplest ways of helping people help themselves develop good habits, behaviors, and routines is to make it as easy as possible for them to do the right thing, whether that's dealing with historic debt, whether that's because they have to borrow new money because there's no other alternative, or it's becoming a saver and then eventually an investor, etc. And when you get someone, as I have, who turn around and said, salary finance, having the availability to have that salary deducted the loan that was agreed within 24 hours in my bank account to deal with the historic situation was like lightning in the load. And he said, and we got a testimonial video, you've got to watch it. And he says, my wife said to me the day after it was all sorted and I paid off all this history and I had just one payment that I knew I could afford. She said, you look taller. Now, I want everyone, I'm not really worried about whether you're short or tall, but I want people to walk taller, metaphorically, and I want people to feel actually some pride in themselves. And here's the final thing I'll leave you with. What we find is that it's no good just giving people motivation. It's no good just teaching them the skills, important as they are, and I do that all day long. You've got to give them the products and the tools that are going to help them. No point in turning up to dig a hole with no spade, because you can do it with your hands, but it's bloody hard work. So that's what it's all about. And that is why someone like me, who's passionately anti-debt, is involved with a company like Salary Finance. And I've been doing this for 3.5 years, and I've interviewed thousands of people, and I've given thousands of, hundreds of presentations. And I'm very, very enamored when I see people say, I'm making progress.
No, that makes sense. It's quite interesting, Jason, in a lot of these conversations, etc., that we've all had and we've all heard, is we suddenly seem to feel it more accepting and encouraging young people to take out a student loan, or more accepting to take out a mortgage, etc. But somehow affordable credit and, managed repayments and structured affordable credit seems to be the demon. So I find it quite interesting that we have this contrast where we don't educate people enough around APRs and numeracy, and actually what does it mean when it comes to understanding the basics of financial well-being.
And I would just say one more thing, Naz, just for all of our HR colleagues there. Some HR colleagues are fighting a battle with people in leadership who don't live in the same world as everyone else, okay? They live in a world, but they think everyone should be living according to their standards, their capabilities, their resources. That's a problem, a disconnect. So I know that some ambassadors there feel that they need to somehow they're fighting a hard battle with the people who actually have to say yes or no at the top, but aren't dealing with the coalface. And one of the simplest ways that they can deal with that is to find case studies and real stories, whether it's the Nat story, but we've got loads of testimonials and we can share those with you, even if you don't want to do anything with us, to share, to get this well-being, this financial well-being on the agenda of HR directors and realize that they cannot really abdicate, well, they can abdicate responsibility, but in a very tight labour market where it's difficult to find good people, actually, this is the thing that defines the difference between great employers and average.
Yeah. And that's a really good segue into coming to you, Natalie, again, because as a reward lead and with that hat on, how do we influence leadership teams to consider affordable credit as an option?
Well, I work in civil service, so if there is anything that resonates with me from what Jason has just said, when I first started talking about financial well-being and affordable borrowing back in 2014, all of my leadership team are like, why can't they just get a credit card? Why are we encouraging people to borrow money? Because as Jason said, they live in a completely different place. I run webinars, and I've done several of them now. And for those of you that have been, you might know this already, but for those who haven't, I give 7 takeaways at the end of my presentations. And I think these are the key to how you get people on board. So what you first of all need to do for your leadership teams is you need to ask your people what's important to them. So when you ask your people what's important to them, nothing is more important when you go to your leadership team, as we did in DEFRA, and say 75% of your employees' leadership team are telling us that it's your responsibility to give them a financial education hub. That is one of your biggest drivers that's going to get a change in behaviour from your leadership team. It's really important as well that you build an informed financial wellbeing strategy that includes the products, because as Jason said, you have the best strategy in the world and you can give people all the tools, but if you haven't then got all of the products to go with it, they've got nowhere to take that newfound knowledge. The really important thing for me is number 3, prepare to educate and explain the importance of a financially capable workforce. So you are going to have to drive it. You're going to have to be passionate. You're going to have to be the one that stands there and educates and brings these leadership teams on board. And the other important thing, I think Jason's touched on it, is no one size fits all. So I work for the Department for Environment. We have 14 organisations that I support. Each one of those is different and has a different requirement, and each one of their employee demographics has a different requirement too. So it's knowing your customer. You need to know what's out there and what's available in the market so you can find a flexible and adaptable provider like Salary Finance that will literally say, okay, what can we do to fit round you, rather than this is what we deliver, make this square peg fit in your round hole. I think you need to work with your teams to ensure that it isn't a tick box exercise, because right now in the last couple of years, financial wellbeing, affordable borrowing and all those other things have very much become a tick box exercise, especially since the pandemic. And you really absolutely need to have your champions, because they're the ones who will take it forward for you. So like Jason said, the case studies, but also have some, people who are your kind of champions in leadership teams that can say, well, he thinks it's a really great idea. And then the other most important thing is about your communications. Clear, defined communication that is frequent, and you keep reminding people, this is here, this is part of your employee offer. We do every quarter, we do a newsletter to all our staff, and every quarter we put in there a section on what Salary Finance are doing for us. This month, Jason's just done a brilliant webinar specifically for DEFRA, because we just launched the Learn platform, and it was so well received. We're still getting questions about it now, and everybody's like, when's he coming back? And all you need is those people to then start talking to some more people, and before you know it, the snowball's huge and everybody's on board. That's the best advice I could give, Nels, really.
No, thank you for that. I've been busy making notes, so I'm sure in the follow-up when we send this out, there'll be I'll come back to you with some of the things. I think the things that I came out with, and I guess I take out, is just having this passion to reiterate the messaging, because I think with financial well-being, as we were perhaps with mental health, is you've got to keep on reiterating, making it a safe space to talk about it. And I guess this leads me into bringing you into the conversation, Luke, in terms of your experience, and it's been quite vast across the public sector with a variety of different public sector enterprises. What successes have you seen, behaviors or anything you could share, just in short? We will be sharing some resources after, but I guess something that resonates with you that you've seen come through.
Yeah, thanks, Naz. So Salary Finance began way back in 2015. And at that point, the market that we operate in just didn't exist. So, it really was just an idea. And there were some early adopters being the initial investors in Salary Finance. And then, but as this notion gathered pace, we were very fortunate to start working with some early adopters in the public sector, like Hackney Council. And they saw great success. And then what followed after that, which I think was a really big important thing for us, was in 2018, was actually a framework launched that then put financial well-being as this kind of standalone thing that you could then go and procure, and being able to procure something in the public sector is super important. You've got all these things to consider. So that was, huge validation. So that's a major success, I would point out. And now as we stand here with 600 clients, some 150 plus are public sector. Half of those are NHS, and we've got around 50 councils. So there's some huge successes in what the organisation has been able to do in the past few years. I myself joined in 2019. So at that point, when I joined, it felt like we were actually at a tipping point then. So we were starting to spend a lot less time having to educate people on this concept of workplace financial well-being. I think off the back of the framework, off the back of some research that we'd done, but also, one of the partners in this program that you've got running with Ryan, Money and Pension Service, had started to formulate their national strategy for financial well-being. So that's really where we saw the messaging, the conversations change from being about what to the why and the how. So I think that was a major change. And then, of course, we're probably all trying to avoid saying it sometimes, but then in 2020, obviously the pandemic hit and changed everything, particularly in the public sector, because all resources had to be, diverted to that response effort. That was really, tough for us, but another success we'd point out, we felt that the topic was so important that we had to try and keep it on the agenda to a certain extent. So, even with those limited resources available, so we made a whole host of things available, free to the public in general, and shared that across, the sector as well. And then what we started to see as we came out of the pandemic, people started to fall into two camps. There was those that was, look, this is still, very much on pause because we've got all these other stuff to deal with, and resource is such a critical issue. And then there was some that kind of a few that went, I suppose the other way. And one's on the call today. So hello, Glenda. Thanks for your comment as well. That said, this is going to be an ever more important issue, and actually accelerated their efforts. And now we're starting to see that become more and more the case, which is fantastic. And I'll mention two things, and then I'll shut up, Naz. I'll let you get on. So, I had a great success story recently with a client of mine called Falkirk Council. They recently went live, and only afterwards did they share with me that prior to working with us, they'd actually been running like a scheme in-house for credit for employees, but that was being run with a quite high interest rate, and therefore it garnered a lot of negative connotations. So you had an organisation that clearly wanted to help, and they had to balance this risk, which led to higher interest, which then meant that because of the perception of profiteering, if you like, they weren't communicating about that scheme. Almost, I guess, ashamed of it, if that's not too strong a word. But now by working with us, I would say, this is not just about salary finance. There's lots of things people can be doing out there, but they've now got a really positive message. Had a lot of comm support. They've got all the things that Jason talked about earlier, the financial education and the workplace savings schemes, for example. And on top of that, they've got that kind of PR dividend. So that was a really good story that I had recently. And then straight after this is relatively new to me, but I think could be indicative of something that's going to see more of. So immediately after this webinar, I'm joining a meeting with an organisation who have found their way to us because their employees are requesting and asking for lending support so that they can green their homes. Yeah, they specifically want help with upgrading the boilers, adding solar panels, and all the rest of it. Which has then begged the question, well, if it's a good idea for this, why not that too? Okay, and let's broaden out that conversation around, affordable credit in the workplace, and that I think is just quite a good example of potentially different agendas. So whether that's the well-being agenda, the financial well-being agenda, or even the green agenda, now starting to maybe come together, and affordable credit I think has a role, that can play and support all of these things. So I would say, we've definitely seen a shift from, huge that we talked more approach to now maybe thinking, is this something that can be supporting a wider agenda in society as well.